and Managing Director James Joaquin, Generation Investment Management Partner David Lowish, and co-founder and director of the Laudato Si Challenge, Stephen Forte. Stephen, come on up. And over to you, Bryony. Thank you very much.
Okay, all right.
Oh, are we?
They were very...
Hello, everybody. We are here to discuss investing for an impact in the environmental sector. We have 3 venture capitalist investors with us here to discuss investing for a profit and for a purpose. So first of all, to my left, we have James Joaquin, who is Managing Director at Obvious Ventures in San Francisco. Next up, we have David Lowish, who is partner at Generation Investment Management in London. And last of all, we have Stephen Forte, who is co-founder of the Laudato Si Challenge, which is a startup accelerator based in Rome, and he is also managing partner at Fresco Capital, also in San Francisco. If you could all give me a bit of introduction to yourselves and to your companies.
Well, I'll start. Hello, everyone. I'm James Joaquin. I'm actually a Portuguese American, so I'm very excited to be here in Lisbon, and thank you for the warm welcome. I'm one of the co-founders of an early-stage venture capital firm based in San Francisco called Obvious Ventures. I'm fortunate to have co-founders Evan Williams, the founder of Twitter, and Vishal Vasish, the chief strategy officer of Patagonia. And we came together to build a venture fund around a shared idea, a belief that we have that the biggest companies of our time will be the companies that are solving the world's biggest problems. And so we try to authentically only invest in companies that combine profit and purpose, which is the title of our panel today.
Hi, everyone. Thank you, Bryony. I'm David Lowish from Generation Investment Management. This is my second web summit. At Generation, we are growth equity investors focused on making growth equity investings in outstanding companies that are going to change the world for the better. We have a particular focus on climate. We think that's one of the most urgent problems that the world is facing. And we're looking to back entrepreneurial management teams with outstanding products and outstanding customer experiences that can help change the world for the better in terms of carbon reductions. And we do that principally by becoming very supportive minority equity investors in businesses that already have some traction in the marketplace. And we make investments of between $20 and $50 million to help facilitate that.
And my name is Stephen Forte. I'm the co-founder and managing partner of Fresco Capital, based in San Francisco. And I have 2 partners, one in Tokyo and the other in Hong Kong. And we invest in seed and Series A companies that are looking to make an impact, but also are global. And so we're looking for companies that have a global business model from day one. Doesn't necessarily mean at a seed stage they have 14 offices around the world, but that their business model is global. And as mentioned as well, one of the projects that we worked on was the Laudato Si Challenge, which was an accelerator based in Rome for mission-driven for-profit companies with a partnership with the Vatican. And it was just concluded just about 3 or 4 weeks ago. So it was a lot of for-profit companies that are exactly doing the mission of saving the planet.
Great. And to lastly introduce myself, I work for Bloomberg New Energy Finance on the editorial team. Bloomberg New Energy Finance is the research arm of Bloomberg, which does deep analysis of the clean energy transition, including the transport industry. So my first question is, when you're looking to invest in a company that is driving a profit and a purpose, what are the key challenges with this? And is there ever any contention between trying to achieve a profit and also to get as much impact as they possibly can? James?
Well, I'll start. For us, the idea of investing in profit and purpose is core to what we do. So we focus on that. We select for that. So it's not a challenge so much as how do we find the right kinds of companies that fit our early stage venture capital model. Because we're investing early, we do a lot of work around the team. Who are the founders? Why are they creating this new business? What is their mission? What are their values? What is the big problem they're trying to solve? And then we look at what we call the total addressable market, or the TAM. Is this a big financial opportunity? Because our belief is you shouldn't have to sacrifice between profit or purpose. If you find the right team going after the right markets, every dollar of revenue that that company makes will naturally have some environmental or social benefit baked in. So we look for that combination.
And could you give us a couple of examples of the environmentally focused companies you do invest in?
Yeah, absolutely. We're focused in the U.S. market, so I'm going to give you some U.S. examples, but we are investors in a company called Mosaic that helps homeowners take out a low-interest loan to put solar energy on their home. And in the United States, they are now the largest solar lender in the country. And solar has gotten so cost-effective, and Europe was ahead of us on this, but it's essentially the cost of the loan is what the consumer was paying for electricity that they're now generating. So we think it's an incredible engine. It's a profitable company that the more loans that they write, the more solar we have, the faster we get to a renewable, sustainable energy future. I'll give you a second example, which is actually in food, but is tied to our sustainability thesis. We're investors in a company called Beyond Meat. They make delicious alternatives to animal protein that are 100% plant-based. They have a burger called the Beyond Burger that's a runaway success right now in the United States. And it has 2 orders of magnitude less carbon and water usage than eating a bovine meat burger from cows. So we think the faster we can move human food consumption towards plants, the faster, again, we can reduce greenhouse gases that humans are making.
Yeah, interesting. Thank you. And David, do you find with your investing there's ever any contention between this profit and purpose?
No, I think, as James was saying, one of the ways in which we've sort of, having done this for the last 11 years or so, one of the ways in which we approach this is really to step back and look at the consumer experience. We also sort of select our assets dependent on the impact that they're going to have on the environment, or rather the impact that their products and services are going to have on the environment. And we sometimes have some discussion about that, about how meaningful of a solution is this company's products and services really going to be versus sort of a business as usual. And then I think a lot of the time subsequent to that sort of selection of the asset is spent around understanding, is the consumer experience really going to be good enough to warrant them buying this particular product or services versus an existing or that of an existing incumbent? And so a lot of that is sort of a traditional sort of business analysis that one do. Are you building up a competitive advantage by providing just simply a better product? And the fact that it clearly has a positive impact on the environment is actually, I wouldn't sort of say secondary to that, but is actually something which has already been digested by us as a team when we select the asset to begin with. And so that's sort of a little bit our philosophy behind it. Because one of the companies you invest in is Proterra, the electric bus company. We are both exactly. So yes, actually, James and I are both investors in Proterra. So that's a great example of the 5 or 6 years ago, the cost of owning an electric bus for a municipal transit agency in the US was candidly prohibitive versus the sort of cost per mile driven of the traditional diesel incumbents. In the last sort of 24 months, that actually has shifted dramatically. And so now actually it's quite clear to a service depot manager in Louisiana or New York or Los Angeles that actually the cost of delivering a better service to the consumer with much less pollution, no noise, a more comfortable ridership experience is actually going to be less to him as sort of the organizer of the service. And so that's an example where it's really about bringing value to the customer. And then clearly, the buses are completely green. There are no NOx, SOx emissions. There are none of the things that, dramatically shorten people's lives in an urban environment. And so that's a wonderful benefit of that. But they had to get to that stage first of really making sure that there was a compelling economic case, candidly, to allow people to make that investment.
Yes, interesting. Thank you. And Stephen, with your startup accelerator work in Rome, which is based at the Vatican, what are you learning about these early stage startups and how they're trying to approach making a profit and also having an impact on the environment or on health or on education? What kind of struggles and challenges do you see them approaching or tackling?
Well, interesting that you say the challenges that they face, because they look at themselves as just any old startup. To them, they're no different than Google or Facebook or Instagram at that stage. but the investment community looks at them as something different because they're purpose-driven and mission-driven, but yet fiercely for-profit. So they actually all had a lot of trouble raising capital in their early days. Their seed rounds, they would go to your traditional Silicon Valley VCs, and they would be like, whoa, you guys are way too much Greenpeace. Go talk to the NGOs or go talk to impact investors. So they go and they talk to impact investors. The impact investor goes, whoa, you guys are way for-profit. You should go talk to Sand Hill Road and the VC. And so they get this circular reference, and then the reality of it is there's this gap that existed. So it actually is a challenge for them to go get that early capital. So then they cobble together those rounds through a variety of means, either high net worth individuals, a couple of funds here or there. And then the advice that they get is all over the map, because they have some nonprofit NGO grant money, and they might have a board seat, and then they have like your hardcore Silicon Valley VC. I'm exaggerating for effect of that kind of distance, but in essence, you have two different people talking to them on their board meetings, on their mentor advisory boards and things like that. So they themselves have a very clear mission, but the people around them, the advice and the capital they get, has a lot of confusion around what they're trying to do. Are they for-profit or they're mission-driven? To them, they're just plowing ahead, both changing the world and making a profit simultaneously. But there is a definite, clear contention between typically advisors, mentors, and board members and investors. And it's a challenge for them to reconcile that, because you're a young startup founder. You tend to want to value all the great people around you, all the advice that they give you. It was actually quite difficult.
Yes, I imagine when you're advising on boards, it can be quite challenging to think about all these different things. So what do you think are the key ingredients that make a company successful, like Facebook or like Google? What takes them from being a startup in this crowded space to really succeeding? And what do you think we need in the environmental space that could really make an impact? What do you think, James?
Well, I think the key ingredient of any successful business, in my opinion, starts with being purpose-driven. If you look at the original mission statement of Google, I think it's a powerful mission, and it's probably a 100-year journey for that company to fulfill that mission. We spend an enormous amount of time working with founders to understand what is their purpose, and then help them codify their values. We really place great value in values-based leadership. Unfortunately, in Silicon Valley in America, we're seeing a lot of companies that are showing a lack of values, a lack of a moral compass, lack of ethical behavior. We think that that DNA gets set early in a company, and so we really focus on that in general. Specific to sustainability, we, similar to the team at Generation, we do a lot of work to make sure they have a viable business model. Stephen made a great point that we can't be afraid of profits, that if we want to have impact in the world, we should be building very, very profitable engines for growth, because they'll scale that impact even faster. So we do a lot of work to make sure that our investment thesis involves financial metrics as well as environmental metrics.
Interesting. Yeah.
I definitely would concur. I think one of the things which has sort of held back a little bit if I would say the green investment movement or the sustainable investment movement in the past sort of 20 years has been a little bit this issue that profits have been somehow problematic. The candid reality is that actually, if one compares the pools of capital that are available to make for-profit investing versus the pools of capital that are available for sort of either impact investing or philanthropic investing, there are organs of magnitude of difference between the two. And climate change is such a huge problem for the whole world that this movement cannot afford to have actively cut itself off from for-profit capital. And so I think that there is a sort of a cultural mindset that actually there is nothing wrong with generating capital and profits, because that creates a virtuous cycle. It allows you to attract more capital. It allows you to attract more employees. It allows you to grow and to make investments and to develop and to become a better and better company, and to actually, in many cases, fundamentally alter whole industrial economies and the shape of whole industrial economies. And so I think there has to be a sort of, yes, clear sense of purpose, of profit, of sort of mission, cultural alignment, which happens in any case, because actually I think when one has a clear purpose, and that purpose is around candidly saving the planet, you attract talent. And if you can sort of wrap around that, the right corporate structures, and candidly the profit motive, I think that becomes a very powerful engine, and it's not something to be ashamed of.
Yeah, absolutely. Stephen, what do you see with your startups? Do you think it's a mixture of strong leadership and strong ideas that have made these particular companies attractive to you?
I mean, it's definitely sharing the combination of a big, bold vision and the ability to execute against the vision is what makes them quite successful. And to echo what they were saying is, in this space and in the non-impactful environmental space, the companies that dare to dream big and then execute against that are the ones that are going to succeed. So you opened up the question by saying, how can they succeed like Facebook, like Google? That's because they had these big, big visions, and they had the ability to execute against them. And very importantly, they were all coachable. Those founders were coachable by the people that would come in, whether it was their investors, whether it was by other co-founders, or just new employees that came in. And in order to treat these more green startups that are coming out today like, quote, a normal startup. So as opposed to putting them over here in this impact category, let's just call them what they are. Yeah. They're startups. They are for-profit startups. They happen to be solving some of the world's largest problems. I hope this panel 2 or 3 years from now just talks about startups in general, and we're just solving the world's problem, and it's baked into your business model regardless. It's not a special category. You're not treated differently. You're going to run just as fast as if you were building an Instagram or a Facebook as you are building a climate change startup.
Mm-hmm. You know, at Obvious, we actually banned the term impact.
Love it.
Yeah.
So we made up a marketing term. We call ourselves World Positive Venture Capital, because we wanted to get out of that space, that notion that somehow you're sacrificing profits or financial metrics for the good that you're doing. We actually think they amplify each other. These companies will outperform. And I think all 3 of our funds are trying to prove that. But we're a tiny, tiny fraction of the amount of venture capital and growth equity that's out there in the world. So we have amazing companies. We're on our way to building these proof points. But I think, I don't know about you guys, but a big challenge we have is we have to say no to most of the things that we look at, because we're really filtering for the best ones that have that combination, so we can build the financial success stories to unlock more capital into this category.
Because drawing on what Stephen was saying, like at Obvious Ventures, you do kind of dream big, because one of the companies you invest in is Lilium, a German company which is making electric buses that lift up vertically.
Electric vertical takeoff and landing air taxis, which everyone refers to as a flying car, essentially.
Because some people will probably think that's...
So that's definitely a moonshot.
Yeah, exciting though, very exciting. What about you, David? What do you think in terms of environmental sustainability trends? Where are the opportunities?
I think, I mean, James has sort of hit it on the head. We actually saw the demonstration of the Lilium flying vehicle and it works. It exists. The prototype has flown, and it's extremely exciting. I think, candidly, we've done 3 transport deals so far this year. So we've become, very proud investors in a company in Taiwan called Gogoro, which is an electric scooter based around a sort of a battery swapping station. We've become shareholders in Motivate, which is the New York City bike scheme, now expanding in San Francisco, sort of operating really around urban mobility. And as we said, we made an investment in Proterra, the electric bus company. So we think that transit is actually a pretty fruitful area. Is also a very, very big traditional sink of CO2. But the other areas that we're looking at as well, we're currently quite engaged in actually a number of sort of consumer goods companies, where we think that there is a substantial opportunity to invest in businesses that have a materially lower CO2 footprint, both in the way in which they distribute their products, but also in the way in which those products are manufactured. And so there's a sort of a number of quite exciting things that are going on in that space as well. And we're busy looking at a lot of different things.
And before you make an investment, do you quantify the potential impact this company could have on the environment, or is it not that black and white?
We certainly do. We sit around the table as an investment group and as an investment committee, and we talk about the impact that the company will have on the environment. And we also talk about some of the other sort of softer elements, but we also do make an effort to actually quantify the sort of, if you term CO2 savings or impact savings that the products and services will have. I would just say, it's not sort of gospel truth for us. You know, one has to be somewhat careful with those calculations because they do vary by different sectors. So, you know, one can't have the same expectations in terms of CO2 reductions of a consumer goods company as one might have of sort of a renewable energy company. And so it's important to bear that in mind. And we want to have a sort of a broadly diversified portfolio. But absolutely, we do look at numbers. Yeah.
Yes, absolutely. And Stephen, in yours Accelerator, do you have a diverse group of companies that tackle lots of different challenges?
Yeah, and just expanding on about the concept of looking at the environmental goals of the companies that come in and looking at the challenges that they're facing is we expanded the definition of what it means to be green tech because I think people need to think about that a little differently. I think a self-driving, autonomous, flying bus 5 or 10 years ago, people would tell you is not green tech. But in my opinion, anything that's reducing the carbon emissions, that's increasing the human condition that way, is actually part of Planetech. So
or a plant-based burger.
Right, exactly right. So we've expanded our definition to go a lot deeper and look at things like access to water and food tech. So some of the things that we invest in are not necessarily things that are going to be directly lowering CO2, but indirectly will be because, like the synthetic burger that James is talking about, food tech can have great, enormous effects on the environment, but they're upstream, not downstream.
Yes, absolutely. Do you agree, James? Do you?
100%. I mean, to your question about measurement, because we invest early, we think our job is to support our founders. Hopefully, we have some young entrepreneurs and founders in the room. If so, you know how hard it is to build a startup. There's just you're defying gravity on every front. You're trying to take market share away from incumbent leaders. You're trying to compete with other startups and stay ahead of the pack. And so what we don't believe is we don't believe in putting environmental measurement requirements on our entrepreneurs. So we feel like if we want that data, we'll do the work. But we don't burden our companies with that work because we think they have too much to do already.
Very, very good. Well, thank you very much. I think we'll wrap up there. It's been very interesting to learn about the challenges and opportunities in sustainable investing. Thank you.
Thank you, Brenna.
Thank you.
Thanks, everyone.